everyone, and welcome back to Market Insights, a series where we delve into interesting topics affecting equity markets. Today, I have Cornelius and Jacques with me. Thank you guys for being here today. So let's kick off. So we saw a strong US earnings season with almost 80% of companies beating their estimates. Could we maybe unpack that and spend some time looking into these results?
Yes, the number north of 80% is the strongest we've seen since 2021. The aggregate earnings growth came in just above 12%, and information technology as a sector led the way with more than 90% of companies beating earnings estimates. All the big tech companies delivered very robust results, with Microsoft, Apple, Alphabet, Amazon, everyone reporting very strong results and giving positive outlook statements. Some of the shares were rewarded with share price moves up 8%. Amazon got clapped a bit because their cloud growth came in weaker than the market wanted, but still very strong results. If we think about the extent of the earnings beats, just over 8% earnings surprise, which means the earnings came 8% ahead of consensus. That is in line with the 5-year average. It's custom for US companies estimates to come in high at the start of the year, then get downgraded, then the companies come in and beat quite comfortably. So 8% isn't something new. Interestingly, we saw consumer discretionary as a sector beating by 14% in aggregate, which shows that the US consumer is in a much better space than people expected. And we can also see, if we look at the amount of references to recession, that completely dropped off to normal levels, where everyone was quite nervous in Q1 reporting season. Just after Liberation Day, almost a quarter of companies spoke about a recession. This time around, 6 sectors, there were no companies actually mentioning recession. If we think about the guidance that the companies provided, more than 60% of the companies issued positive guidance, which means the earnings that they're guiding the market is ahead of what consensus is penciling it at the moment. And there you have a mixed bag. Industrial companies are actually issuing strong guidance, as well as healthcare. And then by far the most positive mix is information technology again.
Brilliant. Thank you for that color. That was really informative. So we've seen really strong earnings growth and guidance coming out of the infotech sector. But that's not something new, is it, Jacques?
No, so taking a bit of a step back, following the earnings recession that the Mag 7 companies went through in 2022 with a pullback in spending, we've seen very strong growth delivered by the Mag 7 over that period. And using 2024 as a base, we can see that they've delivered more than 30% upgrade to earnings of both 2025 and 2026 calendar years, which is opposite to what we've seen from the S&P 493, where they've had between 5 to 10% downgrades in their earnings. So looking at the total shareholder returns for the year, very similar to last year, where it's been driven predominantly by the Magnificent Seven, which roughly falls within information technology and communication, and again driven by the superior earnings growth posted by those businesses. 4 of the sectors actually posted negative earnings growth while benefiting from a re-rating that's driven their total shareholder return.
Brilliant. Thank you, Jacques. Please feel free to join us for our next session, where we'll unpack the information technology sector in a bit more detail. Thanks so much.